Moving on to the markets now. Earlier this week, we were able to catch up with Darin Fessler of LAKEFRONT Futures and Options. We discussed the ongoing tensions between several nations and the possible implications for the grain markets. But we began the conversation by reviewing the wild ride that the grain markets had for the month of January.
Absolutely, it started off 22 very, very strong. I'm so happy for producers out there. We've been getting another opportunity, and as I like to say, look at the price over the calendar. Sometimes the calendar can, make guys a little bit complacent to do something. You still got insurance pricing month starting here in February, and then you got obviously who knows what the weather's going to do out there, but price over calendar. But boy, this year has started off on a very strong note.
What was the biggest surprise to you as we started 2022 with a lot of momentum in the grain markets?
Obviously, it's been the veggie oil markets, and then subsequently, obviously, the beans. You look at the bean rally that this market has been on, and you start thinking about, okay, is this really fundamentally driven, or is this much more of an algo / computer type of driven, just momentum buying in here? And I really think that it's the latter part of that, because we're really not trading fundamentals here at this point. Even though we've seen the first week of January, we've seen a lot of decreases with that South American production number, and I was kind of vocal on social media saying, whoa, I think we need to pump the brakes a little bit on the South American crop being a disaster, because it's far from it. Obviously, there are some producers in southern Brazil, Rio Grande do Sul and Paraná, that are would definitely say differently. And there is some areas in those states, though, that are very good. But I think that, you look at February on the next 4 to 5 weeks, how does this crop really finish off for Brazil? Now, granted, I think the crop and that the northern tier of the country is going to be just fine. It's that southern part that plants a little bit later. Could they catch some beneficial late rains that really make up for some lost damages earlier on? I think that that's very, very possible. And you got to watch where that safrinha corn crop's getting planted now, slightly behind their longer term average here, but roughly 10% sold. I'm not looking at any type of really big panic stuff there. I really think what we have seen in January has been backed by just a lot of momentum. You took out new highs, corn, beans, and look, again, the veggie oil market has been very, very strong. Not only the veggie oil, but you had crude oil really starting to push higher towards that $90 mark, over 90 on the Brent. So that's a lot of things that have happened in January. Be cautious, though. New money flow could really change directions here as we transition into the early parts of February.
Now, Darin, you mentioned that South America weather situation. Also something that folks have attributed the market movements to is this developing situation in Ukraine. What's the bigger market driver at this moment, and how much attention are you paying to that?
I always pay attention to the headlines with Russia and Ukraine here lately, and one of the things I want to make note of, what I've been calling is the Putin flex. We've seen this before from Putin, where you move military assets. We've seen it in 2014 with Crimea, and so to me, is Putin putting positions on here to show strength? I think that is more likely the case here because of because of where their location is, where Moscow's location is, at the Black Sea region. I think it's more of a strategic move by Russia than it is let's throw bombs at the situation. But if I look ahead here and I say, well, what is the risk towards especially the wheat market or the corn market? Because Ukraine's a big corn producer. I look at the U.S. dollar versus the Russian ruble, which has really come off here over the last week. So I really think that the tone between Russia and Ukraine has come down, has de-escalated a little bit. I don't peg it any more than a 15 or 20% likelihood that Russia actually does something militarily besides just moving their military assets closer to Ukraine. But as of right now, I think you look at the Russia-Ukraine situation and compare that to the China-Taiwan situation. I am much, much more concerned about China after the Olympics doing something with Taiwan than I am right now Russia-Ukraine.
Well, let's change up the conversation significantly from that point and talk about exports. Darin, any surprises there that you've seen here in late January, now early February?
Well, we're seeing some exports from the Chinese, which is good. I mean, I should say imports from the Chinese, but that's always a good thing. I don't think it's not much more than what it would typically seasonally be this time of year. Now, Brazil will export a record amount of beans here in January, more likely so in February as well. And so you take a look at that structure in itself, and where we're sitting here on U.S. carryout, you really got to wonder, okay, with the inverse between March and July futures, July and November futures. Does the Chinese step in here at these type of inverses and really start buying? I think the question is probably no. So that's why I think we need to err on the side of caution here, reward this type of rally, because really from here on out, let's say February, March, and probably all the way through August, September, it's going to be dominated by the Brazilian export market. So just be mindful of that. If the U.S. is going to see any type of significant exports here on out from the bean side of things, I think it's going to come in the back half of this marketing year, or maybe the back third or back 20% of this marketing year. So reward this market as we go along here, because these are very, very good prices. A producer can lock in here and still have the flexibility on paper, buying calls, call spreads, if we run into some weather situations or if they feel like they need to be more bullish here out to those summer months.
Just 30 seconds here left, Darin. Final thoughts from you. You began to mention some risk management advice might be a great opportunity to make some of those sales, right?
It really is. Don't let the enthusiasm and euphoria of the market miss out on some good opportunities to make some cash sales while basis is still strong here. You can keep yourself flexible. Because you're making your cash sale does not mean that you're out of the market. There's always options out there. There's always different strategies a producer can be to remain long in these type of environments.